It's time now for today's strategy session. Investors searching for direction with both bullish and bearish calls coming out here. You got Barclays cutting their S&P price target for the year amid tariffs and weakening economic survey data. And then on the bullish side, some analysts coming out saying the market is ripe for a near-term rebound and it's time to halt the sell the rally mentality. Joining us now to make sense of it all, Marvin Lowe, State Street's senior global macro strategist. Marvin, so excited to chat with you because a lot of uncertainty at the moment here. I talked about the bearish and bullish calls. Where are you finding clarity in this moment?
You know what? I think that we're getting comfortable that the market is starting to understand all the different outcomes around trade and tariff. And I think that's why we're talking about volatility potentially coming down. So, we started the year and we really didn't know what direction the whole trade discussion was going to go. It probably went in a much more bearish direction than maybe some of the folks expected, particularly if they were thinking we were going to get a 2018 repeat, if you will. Yeah. But now, we've certainly been exposed to so many different outcomes that we've incorporated it in. And what we're seeing is that there's less real discussion about tariffs in terms of what the economic impact could be. We've kind of evaluated it all, but we still are waiting to figure out exactly what direction it's going. And during that period, we had a lot of volatility. We had a lot of position squaring, which means that you've got a lot of folks that are now neutral, waiting to go one direction or the other.
How do you, I guess, run the calculus around both what you're mentioning and what's coming out of Washington, D.C., yep, and just the fire hose of different actions and moves that have been talked about where we're waiting for more clarity with what we've also seen in past technological cycles that has played out in the market too. The dot-com bubble, the cloud move as well, where there's a lot of growth into some of those valuations that investors wait for. And so the confluence of the conjunction or the intersection of those things, how are you kind of running the calculus?
I mean, for me, all this disruptive technology, all these trade advances, it's a long-term play. I mean, certainly there are winners within a short term. Thematically, you get companies that look explosive and ultimately don't deliver, and that's the risk. I mean, it's a very high risk kind of environment that you're working at from that perspective. But real disruptive technology, think about .com, if you will, or .bomb, if you want to call it. .bomb resulted in these companies which are oligopolies, monopolies that are ultimately not going away. So yeah, AI has a lot of promise. There's a lot of valuations associated with it, but realize that we're still in the early innings of that discussion. And if you believe it, there's going to be significant companies that emerge from that.
Is now a moment then to be buying companies that you believe in, regardless of the volatility? Is now a moment to buy Nvidia because you believe in Jensen Huang, regardless of what happens with tariffs? You know what?
I might not be aggressive in buying, but I certainly have not been selling during this period. I do believe in these business models that personally I've spent time trying to understand, and it's a long game when you talk about that type of investment thesis.
I'm just curious, I want to follow up on that because you talked about how we're starting to get this kind of tight trading range where investors you're not seeing whales coming in to sell, to short sell, or to buy necessarily. Yeah. Can you provide a little bit more color on that and why then, why do we go up then? You know what I mean? Why have we been up the last 3 days?
Yeah, so everyone has various data points that they kind of lean into. Certainly there's been a lot of position squaring. We've kind of seen that in the futures market. Within State Street, we have our own data kind of around what we call institutional information around positioning. That has certainly shown a bit of position squaring. So I'm pretty comfortable saying that if you were very overweight or even underweight, you've kind of gotten to neutral. And we could talk about it from the dollar perspective. We could talk about it from tech exposure perspective. Once you get there, you are in a position to really figure out where that dry powder should go once you get more comfortable that you can model cash flows. I mean, analysts, the market, what we're trying to do is get some clarity around where cash flows are going. And right now, that's really, really hard. It hasn't become easier, but at least we're no longer exposed one way or the other. In terms of why the market, continues to creep up, it's because there is still a lot of liquidity in the system that's got to go someplace. And it's somewhat telling that the last couple of days, when things calmed down a little bit, it went back into names that we became very, very familiar with. It's what we know. We understand what quality growth is in the United States. We certainly had a reason to look at Europe in a different way. Their equity markets are outperforming the U.S. by 15%. That's a massive number when you think about it. So there are stories thematically that are easier to get your hands around, even in this environment of extreme uncertainty. And that uncertainty extends to the Fed too. Like what we heard from the Fed is that they know as little as we know on a day-to-day basis.
And so all these things considered, as we kind of set up this next earnings season as well, what is the grade that perhaps you'd give the last earnings season, and then how does that set up the core themes that you think will emerge going into this earnings season?
Yeah, I mean, it definitely is how companies are approaching their capital budgets, their personnel budgets in this environment of uncertainty. So, it's one thing for me to talk about market uncertainty and, I just move by the sidelines and kind of wait for a little bit more clarity before, I make a recommendation around investments. Companies are actually needing to put capital to work over the long term, how many people they need, how much capital budgeting they ultimately are willing to commit. That view becomes important as they need to ultimately come to a conclusion. So I'm looking at it from that perspective. Earnings this season, they look fine for the most part. So far, when we kind of look at whether it's the first quarter or 25 expectations, they're solid still, and they kind of speak to American corporations that are global in nature, that have a handle on their business model, but really getting a sense of, okay, how are they going to approach what's coming out of the White House, and then what other parts of either the globe and or other companies get affected by that view.